Hello, I'm David Cassidy with the midweek update today, Wednesday, the 14th of July. Well, inflation was back in focus yesterday following the release of US CPI inflation data for June. From a headline perspective, the US CPI inflation reading of 5.4% for the year to June came in above expectations of 4.9% and the May reading of 5%. The elevated reading gained a lot of media attention. However, the response from equity markets, bond yields and currencies was much more muted. Looking at the underlying data in detail, the June CPI report showed that a small handful of categories which are sensitive to the reopening of the economy continue to dominate the pricing pressures, which is something that we discussed last month. So with the economy reopening, the continued recovery in travel resulted in airfares rising 2.7% in June, while hotel room rates jumped 7% and used vehicle prices surged by a record 10.5%, accounting for around a third of the headline increases. At the same time, categories that aren't associated with an economic reopening continued to paint a more benign inflation picture. This explains the muted response from investment markets and bolsters our view that the current elevated level of headline inflation won't have much bearing on economic growth or monetary policy, as it remains a consequence of pent-up demand and supply chain congestion, both of which we believe are temporary and will quickly fade. Later today, the Fed Chair, Jerome Powell, will be testifying on US monetary policy and the state of the US economy. We expect he will reiterate that price pressures in the US are largely transitory in nature and also highlight that inflation is coming from categories that are directly affected by the reopening of the economy. The UK also released inflation data this morning, coming in at 2.5% compared to estimates of 2.2%. Now, whilst this is not of the same magnitude of that seen in the US, the drivers behind the reading remain largely the same. Still to come this week, we have US producer price inflation, US retail sales for June, and an update on interest rate policy from the Bank of Japan.